Give me an 8 in the chat. My question will be, if I miss your question, mostly with the prop firm, setting trades with that account. Okay, I'm not sure. I'm losing some of it, so just put your question back in again later on if I missed it, right? So we're looking at this particular thing, and this is just the uptrend, the definition. Now, of course, the downtrend is also going to be the same thing, but just the inverse, right? And when we were in one of the other sessions, I'm not sure if you can remember it, right? I'm not sure if you can remember. They're on your Doug. They're on your reference card, but it's your reference cards. But it's difficult to put all these things. It's basically slides, right? All of it on one thing. It's more so just understanding them, and then from there, applying them within the odd and answers framework or the curve, the trend, and all of those things. But this particular one I'm brought up for a specific reason, right? When I bump up my time frames, who remembers that the question was asked to me that why am I taking the other high that was in a downtrend in yesterday's session or the day before? Why am I taking the other high instead of the one that was like in between? Do you remember that? Right? And that was when I was bumping it up, and then there was some confusion around why I moved it to a specific high when dealing with the breakout segment, right? And this is that reason, because when we're dealing with controlling swing lows, there are specific lows and specific highs. And it's very important that you draw your controlling swing lows and controlling swing highs on correctly, because your zone should be found from their controlling swing low to wherever the breakout segment ends. And if, for instance, you draw, now this is not that example, right? But if you draw your zone on somewhere in here, you might not actually know, right? You might not actually know that it can still run from something in here, right? Okay. So it's very important. It's very important that we understand that the controlling swing low needs to be at the correct point. Now, I want you to hear what Kayla says about it. It's exactly like I was basically teaching. Once again, I haven't seen this video in years. I just know it's in there. And so when I found it, it took me a good amount of time to go and find it, because, of course, you can't search, find me the video that says controlling swing with this and that. I have to go through all the uptrend videos, all the downtrend videos, all of that to find where it actually is, right? But look at what it says here. Controlling swing low of an uptrend. Buyers are in control, therefore lows are in control. Remember what I said? When we're in an uptrend, we look at lows. When we're in a downtrend, we look at highs. Controlling swing low of the uptrend. The lowest swing point, right? The lowest swing point located between the breakout and the nearest swing high, right? There's your swing high. That's your lowest one. That low created that break, right? That low created that break. Maybe that's something Serge will implement in the future. We'll probably need AI to do that, because we'll search the context of the actual video as well, right? I'm just benefiting off of the fact that my mind can remember, or I watched it so many times, right, that it's there. I don't think I said anything when I muted. I coughed when I muted, but it's between that high and that low. This low broke through. This low caused that break, right? This low caused that break. Okay. Now listen carefully, everyone. What Kayla says over here.
Swing low that's located between the nearest high and the breakout of that high.
I think it might be, the volume might not be great there. Let's see.
Oh, that's located between the nearest high and the breakout of that high. Now, the breakout segment of the uptrend is the impulsion phase connected to the controlling swing low. It's the entire up segment starting from the controlling swing low up to the following swing high. Determining the breakout segment of the trend is particularly important because that will play into our strategic decision of where we want to find demand zones to join the trend. So,
who heard that? That will play into our strategic decision of where to find demand zones in the 10. In other words, any demand zone beyond the controlling swing low should never be traded, according to the strategy, right? Now, if you want to do something else beyond the strategy, that's okay, that's on you, but we are trying to get you to first and foremost do the strategy. Can we agree on that? And according to that, no zone beyond that, because the trend would be changing. Okay? So the controlling swing low in an uptrend is your invalidation point. Write that down. It's your invalidation point. So let's hear what she says towards the end. It's 29 seconds.
So in summary, while an uptrend always begins at a low, it isn't official until price makes a higher or equal low and then a breakout occurs above the previous high. For a confirmed uptrend, we define the key components, the controlling swing low and the breakout segment, which combined with supply and demand zones will determine where we engage an uptrending market.
So to the question in the chat,
Located between the
we can only find zones from that high to this low. Even if there's a better looking zone beyond it, even if there's a zone with better odds and answers beyond it, right? We cannot use that. That's against the rules. Everybody with me? All right. So I want you guys to listen carefully when we are playing that, because I don't want you to miss it, right? It's important that we understand that this is the high probability conditions. Everything beyond that is not. You're saying beyond means before, earlier in history. I mean, I'm talking about beyond in terms of, I'm sure that maybe it's my South African understanding of it, but beyond also means going over a specific point, right? So it would be there. Either way, that beyond that area. This should be on our rules list, correct? This is in all search strategy videos. You're never ever going to find any video that tells you to buy beyond the controlling swing low or sell above the controlling swing high, right? Not below the CSL. The CSL, yeah, not below. That'll be an easier way to say it. Not below the CSL. In case I'm confusing anyone. Okay. Everyone with me? Okay, let's go on to the next one. I want you to remember that. Wouldn't the first red candle from the right be on your demand curve if this is the higher time frame? Well, this is not the higher time frame, right? This is not the higher time frame. And if that was on my demand curve, totally fine. Right? Totally fine, because 10 can start in your curve. But doesn't the breakout invalidate the previous zone? I'm not sure what you mean by that. We're talking about demand zones, right? This breakout runs there. We're trading between this low and that high. We can only find a zone inside of there, as seen when the breakout segment is drawn on. Remember yesterday's lesson, why we shade that area is because only the shaded area can be traded in. The breakout is the continuation of the trend. It's the impulse section. I think you have to think more when more actively happens after the breakout zone. It's not so perfectly looking. Yeah, this is not the perfect breakout zone, but we're not talking about that, right? We're just telling you where to find the actual zone. I'm also saying that if you did find a zone perfect below it, you should not be trading it. If you have a very big, massive breakout zone, right, and it seems like price will get forever to get there, change your curve time frame, change your trend time frame, change your entry time frame. Then there'll be a different trend with a different curve, and it should work. All right? It's all about changing the actual time frames in. Yes, but when activity, more candles happens after the breakout zone. I mean, breakout segment. Liz, I need more explanation on that. That's not clear. Why one of the candles between the high and the low breakout as a wick and no body? This one? Yeah, this is probably just this is probably just a drawing thing, right? Or it could mean that there was no trading activity in any of these areas. It just literally, I don't know. That's weird, yeah. Could be an anomaly of some sort. Okay, I don't want you guys you guys are losing some context here, right? What am I showing you? Purely the area. We haven't chosen a zone. In fact, there's probably no good zone in here, right? But I want you to remember this though. If there is a better zone below it, you should not trade it. So maybe this is a good example. There's no good zone in here, but even if there was a better zone below it, you should not trade it. And you should not trade it because it would have changed directional in terms of trend, right? That's what I want to break you away from. You see, you guys are naturally, which is okay. Your mind is thinking, but let me see if there's a better zone somewhere here. And the answer to that is if there's a better zone here, you should not be trading it. You should then wait for your trend to continue back up again if you believe that the market is supposed to go up. Otherwise, you should be looking for sells. If there's no good zone here, look for sells based on a different trend time frame, different curve time frame, different entry time frame. Right? Yes, you'd be asking the market to break the trend to get to your zone, and we never want to do that, right? The market must always hold the trend to get to your zone. That's a good one, Brandy. Okay, so I'm not going to be doing a lot of chart review here, but I'll do this one. Let's check. Tony says if we had a trend on the 15-minute, found after the curve on the H hourly, when we bump up the time frame and all the candles go into one color, do we skip the trade? So this is 15-minute. Are you saying if you bump up this one, that it all becomes one green color here? Is that what you're saying, Tony? That link is not working. Can you post that link again? Okay. So if that all becomes one color like that, right, it likely means that's not going to hold. Right? It likely means it's not going to hold. Okay. The scoring would low would be on. I want to, Liz, I want to understand what your question is. I think you need to add a little bit more detail and context. My question is about looking at the chart when the candle's going back down. Back down again. I'm not sure what you mean by that, but remember, right? Remember now that we always trade as the whole idea behind supply and demand is that we buy when price is selling, we sell when price is rising, right? So we buy as it's falling down, and we sell as it's rising up from a level. Okay. Okay. So moving on, and I'm gonna go to the charts afterwards again and explain all the other stuff there, right? Linda says, would you please tell me where you would see the curve and trend and zone an MNQ using 1 hour 15.5 at 9 a.m. this morning? Is that 9 a.m. EST? No trade, just trying to see. Likely no trade today because it was CPI. So when it's CPI, it's likely not going to give you that opportunity. And I gave you guys that rule in the first class. Those of you who wrote it down who remembers, I said that when it's high impact news events, you trade a time frame higher than you normally would on a time frame lower than you normally would. Right? I'm going to do that one example. I'm going to look at that one example quick. Then I'll be done with looking at charts for now, because I want to give you the stuff that you need to get, right? Let me quickly just switch over here to my different browser. Because I don't want to get too distracted, everybody, from going to what I want to show you. Otherwise, you miss out on some of the important stuff that I plan to show you today. Okay, but I want to answer your questions as well. So I want to balance it out well. And let's look and see what this chart is saying. Let me share my screen here. Okay, so that's MNQ. And let's go to the, where was that? 9 over here. So I'm going to replay that chart over here at 9. Based on while I'm here, right? You see, this is not the correct time, but this is what I mean by a 15-minute being grabbed, right? That is when price runs below that low, right? But that's not the correct time. The time is as Brandy typed it into the chat earlier, right? Those are the time. But I'm showing you what it actually is supposed to do. Is that it runs a low ever so slightly, but it still does it, and then goes the correct direction afterwards, right? On the 15-minute chart. But to answer quickly, Linda's question is, if we did curve and trend, so we go to our 1 hour, right? Then our curve would be here, and our other curve would be there. And by the way, to the question earlier on, you can also check your 5-minute, right? It's not set in stone, right? It's not set in stone. It's not set in stone. You can check your 5-minute as well, not your 15-minute only. Let's see over here. So Of course, at this point, we are in an uptrend. I am going to now look at the other correlated asset class because just because this is the one I'm looking at might not be the one that it comes back to, right? And that is what I've been, what am I doing here? That is what I've been teaching all about. I'm not going to dive deep in stronger and weaker assets here, but these are correlated asset class, MNQ and ES. So this is the stronger one because that one went lower slightly there, right? So with that being said, if I'm looking at these two, and I haven't looked at MNQ yet, but if I'm looking at these two and we're seeing that the trend is up and I refine it to 1 hour just to see if there's a base there. Here's that basing area. So I'm just gonna, off the bat, I'm gonna expect the MNQ. Wait, is this the YM? No, what am I doing? Let me get out of this demon. First, ES. Right. Let's see. Oh, it's gonna be YM today. Let's see. It's gonna be YM because YM's the stronger one. Okay. So I'm gonna expect the YM to come back and the MNQ not to come back. So this one, based on the hourly zone, to come back here and that one to miss. Or both can miss because of CPI today. Right? Oh, that was close. Yeah, both missed. But look at that. Look at the difference. This one didn't come anywhere close. I mean, this one never came anywhere close. That one just missed. Just missed. And then ran. Now there would have been another opportunity on a continuation trend up there. But that would have been the trade, right? The trend is up the curve. We're low on the curve and we're trying to go up. Why do you expect that? You must come to more of my classes today. Unfortunately, it's not stronger, weaker asset classes. If anybody has a date that you can share with them in the chat when I taught stronger, weaker assets, please go ahead and drop it in there. But this is why I said earlier, even in this class, if you find a situation where you had the perfect zone and it didn't come back to your entry and it just missed you, I can teach you why that is. Right? I can teach you why that is. Okay, let's first, let me quickly, Debbie, I want you to, no, I've been teaching it on a lot of classes, Tony. There you go. Jack has just help you guys drastically out on that one. Right? There's a way to find the correct asset beforehand. Now, that one just missed, but that one missed because it was CPI today, so it's going to be harder to get it in any case. Right? Okay. Now, I'm going to take your questions again. Please, if you put in a question right now that I've missed, just put it in again. I just want to take you to the next one I think you need to see. Right? Because I'm trying to confirm all of the knowledge, all of the stuff as well that I've shown you in the last couple of days. So I'm trying to make sure that you get that. Also, really quick, someone sent an email and asked the question, what is the first step that you should actually take when you're trading? Here's proof again inside of the slide. The first step you take is set the curve, right? Set the curve. Thank you, Dan, for that. If you guys watch here, any interactive practice or search strategy, you're going to find a lot of that in there, more than you'll find in a live trading session. So set the curve is the first one, right? And you're right, Dan, Dow tossed me again. Dow always gets me. Everybody take down that class that Jack is given there. You want to go and watch that. I'm trying to scroll down quickly to find the one that I want you to see. Here we go. Okay. Because we're going to be speaking about M's and W's soon, one of these other classes. So I wanted to take you to trend reversal so that you can understand something before I even get there. Not that. Yeah. Okay. Okay, listen carefully, everyone. I'm going to replay it right on the point that I want. There. I'm going to stop sharing the replay again. And I'll tell you what's the important bit to catch there. But you'll now start to see there's a consistency amongst it. I told you before. And I want to see this. Can everybody see that here is a reversal on here, right? Right? Everybody see this is the trend reversals. Right? This is the M's and the W's, the M's and the W's. Someone says that's my backyard. What are you guys saying? Is it not showing? Oh. I wish it was my backyard. That is the new Mac background. If that was my backyard, that would be so much. That would be so fun. Clear water like that. Okay, so this is a bearish reversal, right? And listen carefully to what's being said here.
Bearish reversal can take different forms. It could have equal highs, where the highs in the M reach nearly the same point. It could have a lower high, which is like a lazy M with a high on the right-hand side that's slightly lower than the high on the left-hand side. Or sometimes a higher high or false breakout occurs, typically into a higher time frame supply zone. Here, the M has a high on the right-hand side that pushes higher than the high on the left-hand side. Let's remember that false breakouts tend to lead to the biggest reversals. Every uptrend begins with a W and every downtrend begins with an M, and this pattern tends to form at higher timeframe supply and demand zones. Identifying a trend reversal increases the probability that your trade or investment will have significant reward to risk potential because you're catching a trend at its earliest point. The next question we want to unpack is, where is a trend most likely to reverse? We'll get into that next. In this lesson, you have a
where is the trend most likely to reverse? So here is what you firstly have to see. Number one, go back to that little trend. Does everybody see that every single M has been closed through the midpoint with a body? Do you see that? Right? And where does M's reverse? As Brandy says, higher time frame supply and demand zones equals curve. Right? So every M I taught you, and remember when I showed you the M's, I also showed you 3. Every M has to, all trends, you hear say also earlier that all trends have to reverse with an M or a W, right? And all the M's have a closure through the midpoint, and all of them are highest likely at the curve point. Okay? All at the higher time frame curve point. Are you with me? Now, the last thing I want to look at before we go and talk about on the charts. Are you guys finding value in this? Let me see if this is the one I wanted to go to. I made a whole lot of notes here, and my problem is that I always say, I've been preaching since the age of 13, and people always tell me that they want my notepad or they want my, if I die one day, then they want the actual the book that I wrote in, or my iPad or my laptop where the notes are on. And I always tell them I can give it to anybody, and no one's going to be able to know what's going on there because I don't even know my own notes at times when I go back to it, right? So, interesting. I'm trying to find this one. Yeah. And I just want to, there's nothing I want to play yet.
before, but we'll repeat it again.
Okay. Now, I want you to see something about this particular chart that's very important. Jack, same with you. Yeah, it's all cliff notes. Sometimes I go back to it a while back and I'm like, Lord, what did I mean by that? And I'll just have shorthand like saying, tell the story about whatever. And I can't even remember the story. But the Bible's not the Bible. A friend of mine says, and I believe this to be true, a prepared man is better than a prepared message. Right? And you always have a word in season. So you don't have to have a perfect message. Just be prepared, sharpened, always ready to give an answer for the hope that's within you. Right? That's what's important. The only thing I want you to see here and make a big note about and understand its importance is this is an odd and answer, right? And it says odd and answers curve. Everybody see that? Give me a 7 in the chat. I hope you guys are enjoying this because this stuff took me like way too much time to go and find. I have a thought and I think, okay, I need to share this with you all to help you solidify this idea. And then I have to go and find that in the videos. Now, the main thing I want you to see here, right, is the question, how high or low is the zone located on the curve? I want you to see what is actually being asked so that you can understand the importance of it. Part of your strategy is to ask yourself your entry zone. Where is that entry zone on the curve? Because that matters. Now, if you don't have the curve, can you do that? Right? If you don't have the curve correctly drawn, can you do that? Can you ask yourself, where is the entry position? Can you do that? No. Right? Look at how important it is. When you place your zone for entry, where is that zone position? On your curve. Right? At all-time highs, there's also a curve. It's just a floating curve. Right, Heidi? At all-time highs, we always sell from supply. We always buy from demand. Just wait for an M to form at the all-time high plus an M plus a continuation down if you want to sell. If you're at all-time highs but you want to continue buying, then you buy from when price has fallen down from that high to a midpoint like a 50% or a discount area. We buy low, we sell high. If price is high and the zone is high, there's nothing to do. Right? That's important. If price is high and the zone is high, there's nothing to do. Okay. Let me stop screen share quickly. Now you guys can put your questions back in. I'm going to quickly show you the short and long position tool. And then we're also going to cover the other questions that came out in between there. I wanted to take you to that. Curve is the important thing. The first to do is curve is the last thing we teach you. The first thing you do when you jump on a chart, right? Now, I mean, that alone should tell you that if you don't have the first thing, can you go to a second thing? All right? All right, can you go to a second thing? No. Okay, so in terms of, I'm just gonna make sure I'm not in my, what account is this? Okay, give me a second. Let me log out of my account because I have a habit of trading, making fake trades on my actual account, and later on regretting that because I didn't check, right, to see that I'm, and I'll be saying, okay, buy or sell. They do all of that, and later on come back and see, oh my word, that's been. And by the way, I was logged into my actual account now, so that would have happened again. Okay, so let's say, for instance, we want to get in on this zone over here, right? We're not, again, everyone, we're not saying it's a good zone. We're not doing anything. I'm just trying to draw on based on placing the short and long position tool. So I'm going to change this to green. I'm not checking curve. I'm not checking trend. I'm not doing any of that, right? I did that on my proper account and blew it up. I've blown up one like that before by actually showing someone else something and then leaving the trade open, going to have supper and things, not thinking anything about it, and then getting burnt by it. So don't let that happen. Okay, so let's do this again, right? So there's my zone. I can go and I can select my long position tool. I click at my entry point. I pull my stop loss to where I want it to be with my little stop buffer. I can do it visually or I can calculate it. I just do it visually. I pull my take profit to where I want it to be. Again, this is not an actual trade, anyone, right? This is just a figurative one. I can now do one or two things. I prefer to right click on this tool and then create limit order, right? Now, if you look at the tool itself, can you all see here there's a dollar value here at the bottom? Right? Okay. So now that's the dollar value in question. I just want to make sure that whatever I trade, that dollar value suits my actual need. Now, this is a big zone, right? This is a big zone based on a 15-minute. Normally on a 15-minute, your zones are not that big. Your zones, oops, I just dragged that by accident. On a 15-minute, your zones look like this, small. That is CPI coming in there. So, but we're doing it in any case, right? And what I can do is I can either go to the units, right, which is the amount of contacts, and I can change that. Let's say I go to 2. Oops, I did 22. If I go to 2, can everyone see this 567 there now, right? There's 567 over there. So now it's adjusted. I can go to 3, then it goes higher. My take profit also goes higher, right? My stop loss goes higher, and I can see the value like that. Now I don't have to remember what is the cost per tick, how many points in a tick, what is the average movement, what is the value of this contract, I don't have to do any of that because it's doing it for me, right? It's doing it for me. Does everyone see that? I can also go risk by percentage. I say I want to risk 1% of my account. You can type in that 1% there, right? If I want to risk one now, it's already close to that, so it's not going to make a difference. I can go 3% of my account. Now, when I go 3%, it shows 2,835, right? Or I can say, I don't want to go percentage. I click this drop down arrow over here, and I go USD amount, and I simply say, you know what, I want to go 500. It's going to get me as close to 500 as it can, but it can't based on and it's going to keep me under, it's going to round down. One contract at the moment, because that's such a big zone, I can't get to 500. If I take this maybe up to 800, now I can see, okay, the closest I can get to 800 is 567, right? Based on this large zone. But if my zone was smaller, then it would be better as well. But does it practice trading fractionals when you do percentage? Yes, it does. But you have to understand the zone is okay. So let me show you better. You'll see it better here. That's just a big zone. I shouldn't have used that one. All right. I'm just going to draw this zone on. So remember, there's still a cost per contract. So it can't get exactly to the amounts you want. Right? It's going to get as close as possible to that. Now, in the Forex market, you can get almost exactly to what you want. Right? The Forex market's a bit different because it has better fractions. So now if I take this zone, I pull my target to where I want it, right? Right click, create. Now I've got 3 contracts at 277. Then I can say, you know what? I actually want to risk 600. So now I've got 6 contracts, and the closest I can get to 600 is 555. So even though I've got 600 in there, it's only going to register 555 because it's doing the calculations for me. If I say, you know what, I don't want to do it in dollars, let me go do it in percentage. I go risk in balance percentage, and I say, okay, you know what, I want 2%. And 2% puts me at 1,942. You guys see that? Oh no, those are not full contract numbers. Those units are used so that it can be used across many different assets. So it's a universal calculation here. So remember, different contracts have different prices. So TradingView's units is used so that it can go across different assets. Yeah, unfortunately, I don't know why they make it yellow, but it says 1,942 there. 2% of my account balance. It says risk percent of account balance, right? Good. I prefer the dollar amount because I can do that myself. I go with the dollar amount. I want to risk $500. 462 is the closest I can get there, right? If you have time, we'll also show how to set up a confirmation entry. I've had trouble with doing that. So anyhow, so this would be, I can now go ahead and hit buy on this, right? Because it's a limit. Okay. Now, if price comes back to this, all the way down till here, enters it in, then I'll be in the trade, right? I'll be in the trade. Liz, so that's what? So there's not really a place to just put one contract. Well, here you go. Wait. Why if you do one contract, right? If you do one contract, you don't have to trade one contract. Don't let contract amount get you. Focus on your dollar value. I tell you why. Because unless the dollar value is not something you want to do, you can go year by units, go one. That'll be the equivalent of a one contract on this one, on this chart. Right? But your focus should be on how much are you risking. Right? Because contracts is an arbitrary number in the air. Trading 5 contracts or 10 contracts, what does that actually mean? Because if the zone is bigger, you should trade less contracts. If the zone is smaller, you can trade more contracts to have proper risk management. So contract number doesn't actually matter. What matters is your percentage in dollar value. This is fractional. This is fractional of a contract because what it's just we're using the MNQ is fractional of the NQ. On the NQ, if we were to try and put in 1 now, it would be a massive amount. So this is like a division of 10. No, a confirmation entry would be like this. Let me show you all. Remember, what is a confirmation entry? Do you guys know what it is? It means that price has gone into your zone and is going to exit your zone. Right? By the way, I have a different confirmation entry that I'll teach as well at one point. So let's assume that this zone that I put on here now is the zone that we've fallen back into. Right? I need it because the only thing is I can't put it on somewhere else now because it won't make sense. So let's assume price has done that, right? And it's now fallen back and we're waiting for it to come out. So it's not out yet. We're waiting for it to come out. That's a confirmation entry. Price is in your zone and it's on its way out, right? In your zone and it's on its way out. Everybody with me? Let me just quickly see what Liz is saying here. Okay, so you put in 1 unit, the true cost of a micro mini, $92 with the real accounts. No, it's based on your stop loss size, Liz. So that's why I'm saying you guys should not be focusing on contract size. Hear me when I say focus on the dollar value. Because if your stop loss is bigger, then it won't be 92, right? If your stop loss is smaller, it will be less than 92. So there's no way for you to get that accurate. You should be focusing on the dollar value. Otherwise, you have to do the calculations. The dollar value, if it's higher than the dollar value you want to risk, you might have to leave it alone or reduce your stop loss. Okay, so now we're expecting this to come out. Now, a limit order is when price falls back to your entry, right? A limit order is when price falls back to entry. A stop order is when price rises to that point, right? So that would be like a limit order. A stop order would be when price rises through that point, and that would be a confirmation. So you place that on. Now you're not in a trade, right? Until price goes over that entry point. Do you see that? That is a confirmation entry. You are inside of the zone, and if price falls down over here, you still not be in the trade because it went over your stop loss without taking you in. But if here's something you have to watch for this though, and why I suggest it's best to put an alert here. Once you've placed your confirmation order, it's best to put an alert here. Because if you don't watch it, it's going to do nothing once it go over that stop loss. But it could come back later and do this and take you in the trade, then stop you out again. Right? Yes, when you're focusing on dollar value, you decide beforehand what is the max dollar value you're going to risk per trade, right? And then you make those adjustments. You don't care about the amount of contracts you're using, right? You make those adjustments. Whenever you hear someone say, I'm taking 5 contracts, I'm taking 2 contracts on this, that's only because they know more or less what it's going to cost them because they trade that asset a lot, right? They trade that asset a lot. And so they say, I'm getting in with 5 contracts on this one, right? So they know more or less this zone is about that size. I'm going to get in with that amount of contracts. But your focus should not be at all on the contract amount. Your focus should be on the dollar amount. If it drops and it hits the stop loss first, nothing, because you're not in the trade. And that's what I'm saying. Put an alert on because nothing will happen. But if price comes back over it again, it will trigger you in. So you cannot place a limit order above the zone line. You cannot place a limit order above the zone line. You can above the zone line. If you're buying, you can't put it above the zone line. If you're selling, then you could. Right? Let's see. What is the downside of confirmation entry? The downside of a confirmation entry in a live market is most times if you're waiting for price to come to a zone, right? In fact, the downsides of a confirmation entry is in the education as well. If you're waiting for price to come to a zone like this, here's an example of it. A confirmation entry means that you need to get and wait for price to reach at least 50% of your zone. But while you're waiting for that to happen, it shoots away and it's gone. That's the downside. A confirmation entry is the one least likely to get you entered. Right? A proximal entry is the highest degree of entry. A zone entry is the second least likely to get you entered. But confirmation is the least likely to get you entered and also the least likely to get you stopped out if it gets you entered. Sorry, if it doesn't get you entered because it goes down the other way. Right? Okay. Do you have to be below the buy stop level to place it? Or would you be able to place it above that level? And if we're talking about buy, you guys have to clarify for me when you're saying buying or selling, right? If you're buying, a buy stop can only be placed above because you're buying at the point. If you're trying to get in on a confirmation, must be above current price. So above that point, right? And then a selling would be a sell stop. Okay? Everybody got that? It is the least likely to get entered, but a confirmation entry scores less than a proximal entry anyway, higher risk. So manage using confirmation, yes. Better to miss it than to get crushed. Yep. It's all preference based, right? It's all preference based. Like you can take my suggestion is if you take confirmation entries, make all your entries confirmation. If you take zone entries, make all your entries zone entries. If you take proximal entries, make all your entries proximal. That's where you keep your data consistent. That's the best thing you can do. All of them work. All of them have pros and cons. Your zone entry gives you the best risk to reward, right? Because you're deeper in the zone. Your confirmation entry is least likely to stop you out, right? Your proximal entry is most likely to get you in the trade, but also then highest likely to stop you out. So there's pros and cons to all of them. Okay. Now, quickly on zones, because I said I want to cover a little bit about zones as well. We all know that there are 3 types of ways to enter in on a zone, right? And then I'll go back to some curve and trend again. We know that there's 3 types of ways to enter in on a zone. The one way is that if you have a zone, and I'm gonna just come to a zone. And the replay. You're welcome back, Mandy. Now I have all the answers again, guys. Sorry earlier, I was struggling. Mandy was gone. Right? So let's assume this is the zone we want to take. Can everybody see that? Give me an 8 in the chat. There are 3 ways to get a trade. And I'm going to tell you which way to use when. Right? Now remember, this is not curve, everybody. We're just talking about zone now. We are just talking, I repeat, we are just talking about zone. Right? Just zone. So if this is a zone that we want to take, I'm not looking at trend, I'm not looking at where it's on the curve or anything like that. This is just zone, right? There are three ways we can enter in the zone. Number one is we can enter in the preferred method, which is highest body, lowest wick, right? Who uses that one? Let me know in the chat. Highest body, lowest wick. Okay. Then the next one you can do is you can do wick to wick, right? Wick to wick. Now, I'm sorry for the people who already know me showing this and stuff, but of course, we have a lot of newbies in here today, new people as well. And I want to make sure they get it as well. Then we go wick to wick. And lastly, right, we have lowest body, lowest wick, right? Lowest body, lowest wick. Those are the three. Those are the three. We're just crashing the party, says Angelica, right? The veterans. Those are the three. Now, who'd like to know when to use which one? Because I've got rules for when to use which one, right? When it comes to curve, it's always wick to wick. Write it down for your notes. When it comes to curve, it's always wick to wick, right? But when it comes to zone, here's when you use which one. When you look inside of your zone, right? When you look at inside of your zone, thank you, Dan, and you see that there's a candle, even if it's just one candle, but many times it's more than one candle. But if you see inside of your zone that there's a candle inside of that zone where the zone has more wick than it has body. What do I mean by that? If you look at this candle, you see that that's got wick there and wick there. There's very little body on that candle, right? Can you guys see that? There's very little body on that candle. In those cases, you go with the wick to wick method, right? You go with the wick to wick method, like that. I'm going to tell you why, but just write it down for now. If the candle presents as more, if any of the basing candles presents as more wick than body, not all of them, it just needs to be one. If any of the basing candles presents as more wick than body, you go wick to wick. All right. If any of the basing candles present like normal, where it's like this, maybe not, that one's not perfect. Let me find the normal preferred method. Like if any of them, all of them's got more wick than body. What am I doing here? When you want to find something, right? Okay, yeah. If the candle has more body, if the basing candles have more body than it has wick, right? Then you use the preferred method, like that, right? The preferred method, like that. Everybody tracking? And then the last one, when you're trying to, it depends on if you're trying to sell or if you're trying to buy, right? The last one depends on if you're trying to sell or if you're trying to buy. Now, let's say in this scenario, we're trying to buy. The last one, if you're trying to buy, you want to buy here. I'm going to circle where we want to buy. We want to buy somewhere here. If we're trying to buy, and we believe the market's going to go up, we see candles in the base where there's larger wick at the bottom of the candle, we go wick to wick, right? We go, not wick to wick, sorry, we go lowest body. It's actually here, the lowest wick. We don't even need to include that. We can just cover the wick parts. And you see what happens? It goes into that before running away. And if you want to sell, we're covering zone here today. And if you want to sell, you find, and I'm trying to find an example quickly, like this. When there is more wick on top of the candle, you can go like that. Not the best example because this candle itself has also more wick at the bottom, but you go like that, right? Out of there. So you need to first determine direction, then look at candles, right? You sell, if you believe that you're going down, you need to have a larger wick on top if you see big wicks. If you believe that you're going up, you need to have the larger wicks at the bottom. Let me find a up version. Like, let's say we believe that this is going to go up, right? Here's that example. You go from there. Notice where it turns. Inside of here, then runs up. You see that? Just the wick, right? Just the wick. No, this is not wick to wick because wick to wick is there. Oh, you're asking me, would this candle not be wick to wick? Yes, this one would be, but I'm just trying to give the example. Of course, this always happens when I'm trying to find the perfect example. Then there'll be nothing like that. Here's one. Here's one. Here's one. Here's one. Right? This candle has more wick at the bottom. Runs into that and runs away. This gives you much better risk to reward when you understand in advance. But the main one I want you guys to get, the main one is the more wick. So let me go to current price quickly. The more wick than body one. Because here's what you're going to see quite often when price approaches a more wick than body, and I have to find one now. Yeah. If you use the preferred method over here, it never gets entry. If you saw that this candle is more wick than body, and you went wick to wick, it gets entry. That's going to happen a lot. Whenever you have a situation where it's more wick than body, it's going to hit the wick most times. Don't believe me? Let's look again. See this little drop base rally here? What if you went with the preferred method and you did that? Never came in. But if you took it to the wick, came in and ran away. More wick than body. Who sees that? Ever been in a situation where it came really close to your zone and ran away? It's one of the solutions. And you're going to see this a lot, right? There's going to be a lot of this. It's always difficult to show you once you're looking for it, but when you're actually in a live market and you see something miss your trade and you go back, you'll see a lot of this. That's why this one's the important one to get. Where's the more wick than bodies now? I'm still looking for it. And it has to be with the trend. You know, we're not looking at trend or curve or anything here. So I have to find. This one barely goes in here. You might have gotten taken in, but you probably would have been a little bit more confident had you actually drawn it wick to wick, right? It goes in there, but you would have been a little bit more confident if you were wick to wick, right? Be in the interactive practices. Yes, I cover a lot of this. What about when you see a long body drop in and drops out, no base? Then that's not a zone. Oh, you mean like if it's a... No, I think you mean a drop in a rally or a rally and a drop. Then you use the lowest candle, like I discussed in lesson 1 and 2. You use the lowest candle in the series, right? Here's another example. Last one on this. If you drew that on, never get entered. If you drew this on, never got entered, right? However, if you went wick to wick, there's your entry. More wick than body. We see that? And especially on your lower time frames, when you get trying to get entry, there's gonna be a lot of these situations. Let me see here. Look at this. If I draw this on correctly, we never hit the entry. Look at that. We never get there. If I see that this is more wick than body, I would have brought that down till here. And we get entry. And price drops away. Who finds it helpful here today? Right? There is a ton of this. Look at this zone. Never get entry. Price never comes back up to it. But wait a minute. More wick than body. Bring it down. Hits it perfectly. Runs away. It could make for pretty wide zones, yes. It could make for pretty wide zones. But that's going to depend on you. Have to see, does this make sense for me to trade within these parameters? Right? I'm just looking at a random 15-minute. You have to see if your risk to reward still allows. But I'm teaching you why it misses your entry completely. And then it runs away. Because look at the alternative is, on this one, for instance, the alternative is that you just never get entered. It never comes back. And it runs away. Right? Now, when you pair this with stronger and weaker assets also, which I was talking about earlier on in an example, what you'll then see is that if it's doing this on the one that you're supposed to trade, there will be better risk to reward in any case. Right? LSG says, yes. PS, I finally won going short on MA yesterday. Well done. This is gold. And guys, this, if a basing candle has more body, what is the preferred method you mentioned? The preferred method is the one that that we all know that most of you are probably trading, right? Which is highest body, lowest wick in demand, or lowest body, highest wick in supply. This is the preferred method, right? Lowest body, highest wick. It's called the preferred method in supply and demand, right? Okay. Earlier, look at this, by the way. Remember what I said about that? Why did we say that this is going to fail likely? Right? Why did we say this is gonna fail likely? Right? Or look at how deep it's in here. And I'm not talking about the sell. I'm talking about the buy. And when we brought it on earlier, when Tony asked us about it, because when you do this, a trend on a lower time frame is a rally-based rally on a higher time frame, and what we don't have is a rally-based rally on the higher time frame. So it makes it lower probability. All right? Yes, it's true that price will go for higher time frame zones and plummet through. And remember what I said at the beginning of the session: if CPI only went one way today, what's going to happen? Who remembers me saying that when everybody said it went up? I said, nah, it's going to come down today still, right? Because that's the characteristic of CPI. But now we can see, why is this zone likely going to fail and possibly has failed on the other assets? Let's see. Yep, right through it on MES. Look at that. Right through it. You guys see that? I called it beforehand. Right through it on YM. How? Catch this, everybody, on the trend aspect. Catch this part on the trend aspect. I'm going to say it again. A lower time frame trend, which is a 15-minute year, must be a higher time frame rally-based rally. We don't have a rally-based rally on the higher time frame. That's a sign it's going to fail. Who's getting value here? That's a sign it's going to fail, right? Now, if it comes down, we won't naturally say it's going to fail here because there is a rally-based rally there. But the problem with that one is what? In order to get there, we need to break trend on that lower time frame. And we don't want to do that. And this is a bad area on the lower time frame. Yeah, by the way, when he draws a zone, that's our only wicks on nobody's. Looks weird, but when you look at the lower time frame, it becomes a zone. Yes, Dan. Dan, you've been in a lot of my classes. Where have you been hiding? In the behind the scenes there, Dan. Right? You've been hiding there behind the scenes because that is also something I've been saying. If you go down on the lower time frame, there's a perfect zone there. I want everybody to catch us on trend. I want you to remember that a trend on a lower time frame is a rally-based rally, or a drop-based drop, or a drop-based rally, or a rally-based drop on the other time frame. Now, you've heard me most times just speak about the rally-based rally, as Brandy said earlier on, or the drop-based drop. But that's not the only formations that we get, right? Don't we also get rally-based drop? Right? And drop-based rally. Okay? Batman and Robin. Right? Remember, we get this, right? Everybody with me? Are you guys working with me? We get this trend. Then what is that? Right? What is that? Because we also get this formation, drop-based rally and rally-based drop. You want the secret code? What that is? When you find these, here's all that I need you to do to make sure that it's a good rally-based drop or drop-based rally. You see, you just learned that a good rally-based rally is a trend on a lower time frame. And a good trend is a rally-based rally on a higher time frame. Now, how do you know that this one, there we go, Jose. How do we know that this one is good? These on a lower time frame are trend reversals. W's and M's. And where do we like to trade the trend reversals? Where do we like to trade the trend reversals, everyone? At the curve, which means if we find one of these, not at the curve, should we be trading them? Because what about this one? Drop, base, rally. Not the curve. Goes down. See what I'm saying? So Andrew, yes, if it's not at the curve, we need another phase down. But now you can also understand things like this. You can understand things like this better. What about the fact that this one just gets run through here? Right? Obviously, from a higher time frame, this is not the curve. And it runs through. Let me see what everybody's saying. Check the correlated asset, wait for 2 breaks, then you can trade the trend. Yes, if it's not in a curve. No, you always look for M's and W's on the intermediate time frame. But you look for them at the curve. And so I was showing you curve, but remember, I'm not showing you a MOW here. I'm just showing you a drop base rally. Right? And I'm showing you it doesn't hold because it's not the curve. This is a good class. If you go back to this, we call this entire move over here based on Tony's post asking about this particular area. And there's your example. This was never going to hold because it's not a rally-based rally. Right? It's not a rally-based rally. It needs to be a rally-based rally. Which also, I want to bring that other point in. Let me see if I can find one here. This one I always find a hard time finding an example about, but when you're in a live market, you always find one. Let me see this one here. Once I find it, I'll show you. Let me see. I cannot find it now. Okay. Basically, let me just draw it. There are times when you get this happening in the market, right? All right. When you get this happening in the market, then you draw on your segments and you do something. I guess you got drop, right? And now it starts to get confusing. Is this the high there? Right? And then you get all of this down, 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 down. Which one is the controlling swing high? Is the question, right? Is this the controlling swing high? Is that the controlling swing high? Is that the controlling swing high? Let me number them. 1, 2, and 3. Right? Which one's the controlling swing high? I'm almost certain, right? I'm almost certain that in this case, the controlling swing high is either going to be 2 or 1. It's either going to be 2 or 1. We are most likely inclined to go for 3 because we see it break below this. But that's why we use that bump up trick, right? Because sometimes when you bump it up, you either see this, right? Like that. Or this eye and that leg melts together and it does that. Right? These two likely not 3 because this is so close. These two go together. This is that example I showed. I wonder if I still have it. I might have it. Might have it on Bitcoin here. Please tell me I still got it. I might have it. I just thought about it now. I might still have this. Yes. Perfect. This was on a live trading class. Perfect. 15-minute. Right? If you look at the 15-minute, everyone, I want you to see this. Let me take this off. It looks like the controlling swing, right, should be here because price is broken there and there. Okay? You guys see that? So really, it looks like the controlling swing should be either this high or that high. You guys follow with me? Paul, now we're going to get into the depth, just as you go. Right? I was kidding. See you, Paul. Is everyone with me here? Because the controlling swing high is the last high that creates the low. right? But the market isn't always that perfect. So use your bump up trick to get some clarity, right? What is a trend? A trend is a drop-based drop or a rally-based rally on a higher time frame. So I go up to the 1 hour and look what happens. Do you see it? This one disappears. That one disappears. This one remains, and there's the break. Who sees that now? You guys see it? Now, watch what happens when price comes back. If this was your controlling swing high, or that was your controlling swing high, watch what happens when price comes back. It shoots through those two. It ever so slightly wicks that. It would not have stopped you out on the last one, because that would have been within your star buffer. But the other two would have stopped you out, and it works from there. Your higher time frame bump up trick solves the problem of knowing, do I have the correct swing high or swing low? Right? Do I have the correct swing high or swing low? Let me go back there, sorry. Wouldn't it break the trend through to get to that trend time frame? No, because that's why we're using the bump up trick, right? It does look like it's gonna break the trend, right? It does look like it's gonna break the trend, but what we are discovering using the bump up trick is that we're drawing our trend wrong. It should be drawn like this. Because the rule that I'm giving you, which is a lower time frame trend, is a higher time frame drop-based drop, defines for us where to objectively draw that high every time. Let me see where we are. And that is where the zone goes. So the zone, now, zone is a different story here, right? We'll have to decide whether or not we'll even take the zone, right? We'd have to decide whether or not we'd even take the zone. Now, here is a zone that hasn't been tapped yet. You can see, look, it's not gone into it, right? This one's gone into it, but that one hasn't. But a zone is a separate story based on the odd and answers. We just want to make sure we get our trend right. Okay, just go up one time frame to check, however many time frames it takes to find yes. You go up until the earliest time frame that shows a quality drop-based drop or rally-based rally. What if your intermediate time frame is the 15-minute and you see a rally-based rally or drop-based drop on the 30-minute, but nothing on the hour? Nothing on the hour, which is the curve time frame. I might still take it, but I'd have to be convinced that we're low on the curve. Then the trend on MES would technically break since the hour zone wasn't there. Exactly. That's why I called even before we came down to that zone, I said that we're going to break that zone, right? Never higher than the curve. Exactly. Never higher than the curve. Let me see. If it is your zone, so where would you put your curve? No, that's my curve. That's my curve, right? That's my curve. My curve was set on the 1 hour from current price. This was an actual live trade taken in the live trading session. So my curve was up and to the left to the nearest supply zone, right? And then we established the trend. Remember that your trend can originate in the curve, right? Your trend can originate in the curve. You just need to make sure you cannot trade outside of the curve and beyond the controlling swing high. And when you bump up your time frames, never higher than, you put on my light, never higher than the curve time frame. In the proximal 50%, I'm not sure what you mean by that. This would be getting in a zone over here. It would be based on that. You know what? You know what? Let me see this quickly. This is a choppy area here, so it's not ideal. But if you really look at this, you see that this follows my other rule. This candle here has got more wick on the top side. So we'd go like that. See? I don't want you guys to get focused on one particular zone and draw an example. Understand the process, right? Which is, if I can see a rally-based rally on that higher time frame, if I can see a drop-based drop on that higher time frame, it gives me greater confidence that it's going to work. I want to quickly go back to that MES just to check something quickly on the 30-minute, because someone asked that, right? Because there's something else. Let's go to the 30-minute. But you see, the 30-minute also doesn't have a zone, right? Over there. And this one has a zone. Interesting. So the 30-minute has a zone on here. MES doesn't have one. YM doesn't have one over there. Look at the two that failed through. MES and YM, and the one that's currently holding is the one that has it. If we go up from here, now you know why. Because now we've got stronger and weak assets. This one has become possibly the stronger one again, based on the fact that it's the only one that has one. The other two do not have a zone there, and they both have run through. Run through there, and run through there. Let's check M2K. No zone, also run through. Come on, everybody. Do you see it? We can never enter in the curve, right? So I know what you mean, Liz, but I want us to think that whenever we're entering there, even on the trend, we're not even thinking about entering on the curve. We purely thinking about entering in the zone that's on the trend time frame or on our entry time frame. But yes, the actual entry point in your trend time frame, your trend can be in your curve. But what I don't want us to think is, let me find a zone in my curve on its own, because that's going to stop you out if your trend is not correct. Right? But look at that perfect example of something now. The only asset that is moved up from that area is the one that has a rally base rally. Look at that. That one's fallen through. No rally base rally. What's my rule for rally base rally? This is not one. Why? There's not a variance in color. Everybody see that? If there's not a variance in color, I don't take it. Not a variance in color. I don't take it. That is the magic you want to see. If you don't believe now, you should. If you don't yet believe, you should believe now. How is it that the only one that's working is the one that has the actual setup? If it happens to be in the curve, it's okay to take the zone, find on the correct. Yes. If it happens to be in the curve, it's okay to take the zone, provided that it's in the trend, not that it's in the curve. The 10 can be in the curve, yes. But your main reason is that it's in the trend and it's in the zone area. Anywhere in the curve is still okay, yes. Now, anywhere in the curve is okay with the direction of the trend. Remember what I said also, I think in lesson 1 or 2, we don't just want to violate our curve if we've gone in more than 50%, because then all curves are violated, which means that we can't trade anything because every curve is going to get touched at some point. But if out of our curve we produce an M or a W, which in this case we didn't need to produce an M or W because it's a trend down, right? Then that one we can still take. So this is just pure amazing here. You can see that when I said to you that a higher time frame, and not just me, but Kayla as well, a lower time frame trend is a higher time frame rally-based rally or drop-based drop. And there is no better confirmation than actually seeing this play out like that, because this one, right, has it. And where would your controlling swing low be? There. Now, I did think this was going to fail early on, but I thought it was going to fail based on the fact that there was nothing here on the 1 hour. But I'm so glad someone asked about the 30-minute, because it just needs to be higher than not higher than your curve time frame, but higher than the trend time frame. The earliest available time frame will dictate that, right? And there you go. I mean, you see it clear as day, right? Clear as day. It's cutting through all of them. Look at these 4 correlated assets, right, on this market. It's the M2K, the MNQ, the MES, and the MYM. And the only single one working is the one that has the correct criteria that I gave you. This is the same like the live trading session I last did, where we looked at all the assets going, and not YM. I don't know which asset it was now, but there was one of them was the only, silver. Silver was the only asset that met all the criteria, and we took it on silver, and silver won. Right? It's because of that. Okay, questions, comments? Let's see. Let's see what happened in this, right? Now the question then becomes, which asset should I be in? Because I'm not trading the weak asset. I'll trade the stronger one, which I won't cover here today, but I just want to see what you're saying. There's the curve. It hits the curve, 15-minute. But remember, there's not going to be a way for me to get this unless I go on the 1 minute, but that's way too low for this type of setup, right? I wouldn't do that. Let's just see if it gave it there. Yeah. No, I mean, it hit the curve. So in order to take this trade, a W needs to form here. There's no W formed here yet. And I'm already on the 5 minute. I can't take out of a 1 hour curve the 1 minute W. I'm going to low now. And I can get stopped out. Your time frames always needs to be relative to each other. Because if I'm in on a 1 minute year, a 5 minute year can turn against me. Whether or not it works today, it's okay. It's NFP day, but I can't take that risk because the rule I make for today is a rule that must stay, right? Every other day. Okay. So we've established now, and the big thing I want you guys to take away today is the fact that this, right? Most times you're going to be correct that this area is the break and that's the controlling swing. But I want you to use the bump up trick just to make sure that it's not perhaps this one or this one. Because if you bump it up, you might get something like this: rally, pace, rally. What will be the curve the highest to set if we want to have the opportunity to go down to the 1 minute? If you want to go down to the 1 minute, you can. The thing is, it's about entry, right? It's about your entry time frame. You can go down to the 1 minute inside of a 5 minute or 15 minute zone as a refinement for entry, but not from if you're using two time frames. Your curve is going to be 15 minutes and then 1 minute for 15 minutes, then 5 minute or somewhere in between 5 and 1 for trend, and then 1 minute for entry. No problem, Andrea. Right? I promise you, this will keep you safe a lot. And then once you add the stronger weak assets, you'll learn from me in the class that Jack gave you early on. This is going to keep you safe because there's going to be many times when price overshoots a zone. And this is a difficult thing to see in hindsight because you only really see it on the days that you actually apply it, right? So here could be a situation like this, that if you just looked at this as a trend time frame, so this is not curve. If you just looked at it as a trend time frame here, and you did all of your zigzags, right? It's gonna look like this is the last one because that's where it broke. Does everybody see that? That's gonna make you think that this is the controlling swing low. Do you see that? But when you understand that if a 1 hour has a trend, then on a higher than 1 hour time frame, there must be a rally based rally. Watch this, right? Then you go up and you say, let me go check that 4 hour. And then all of a sudden on your 4 hour, you discover where you had your controlling swing low has now disappeared. So you go to the swing point that still exists, which is here. You take away that controlling swing low because a lower time frame trend is a higher time frame rally based rally. Now you draw down correctly, like this, and that. Go back to your 1 hour, right? And look, it's gonna overshoot this one because that one wasn't it, right? You see that? It shot right through this one. And let me blow your mind quickly. It shot right through this one, right? It even missed my little zone trick here. Right? I'm gonna replay it so that I can't cheat and I can't see it. Right? It turned right before that. So I'm gonna do this. You see, I can't see any chart on the right there. I'm gonna replay that chart there. Now both charts are gonna be on the same spot. Let me just check if they did do that. 8 a.m. 8 a.m. Is it gonna do it in YM again? I wanted to avoid YM. Let's see here quickly. It's gonna do it in YM again. What is my luck with YM now? Let me zoom in so I can't see it. Let me go. Oh, this is YM. Did I do that again? No, I did it again. Okay, here we go. This is what I wanted. Now, let me see something. Let's see. Let's play it out. Look at the one on the right. Look at the one on the right, everyone. Look at the one on the left. All right, let's see what happens. Isn't that amazing? Look at which one got entry and which one didn't. All right? I can pick out which one's going to hit based on understanding which one's the stronger and the weaker asset. But we'll cover that at another stage, not in these sessions. I just wanted to show you beforehand, without knowing, I can go there and know that that one's going to hit. How did I choose the asset at the same point that's going to hit and the other one missed? Right? Because they are correlated asset classes, M and Q. This is why I'll never trade both of them at the same time. I'll trade one of them, and I will choose beforehand which one I'm going to trade based on what the asset is doing. Right? But you want to follow, the main thing you want to follow here today is the main key takeaway from trend, right? Is that it needs to be a rally-based rally or a drop-based drop on the higher time frame. Have a great weekend, Alan. Are we saying have a great weekend already? Is no one, Alan, not joining me tomorrow? Thank you, Alan. I appreciate that. Mandy doesn't want you to come back, Alan. She's saying goodbye to you. Okay, so we're seeing what's happening here. I got about 6 minutes left, right? I want to end on the end here today. So we did all of that again. We established now a little bit about zone. I told you we draw wick to wick when it's more wick than body. We draw body to wick when it's more body than wick. And when the wick is on the high side and we want to sell, we draw only the wick of the high. When the wick is on the bottom and we want to buy, we draw only the wick in the buy, right? Scenario. But here you can see this. How many of us would have honestly traded this? Be honest. We would have looked to trade this zone right here, right? This would have been like a zone, perfect zone to trade. We would have. And it would have shot through and stopped us out. And we would not get that trade at all. But now we know if it doesn't do that, now, here's where your frustration is going to lie, right? Your frustration is going to lie in the fact that it's going to feel like I'm restricting you from trading, right? It's going to feel like I'm restricting you from taking trades and the market is moving and it's going. And that's how it's going to start, because when you learn the rules are meant to put you, to govern you, right? What does the Bible says? As long as an heir to the throne is a child, he is no different than a slave. He's under tutors and governors until the appointed time. So when you are a child in a thing, even though you eventually will become the heir of that thing, you treat yourselves with the rules of that thing until you can get to the point of freedom, right? Where you can make the choice. So it will restrict you in the beginning. But as you understand that you can't just take your hand and put it on the stove, right? Because you'll get burnt. Eventually you'll be able to cook food at that stove because you understand and respect the stove. So in the beginning, we make the adjustments to have rules. And then later we start saying, I've seen this before. I can take this trade. You just saw me put two different charts on. I said, let me blow your mind with something. I said it before and I said, it's going to miss this one. It's going to hit the other one. And it did it, right? Because now I've moved into the grace of that thing. But before you get there, please do me the favor. Operate with the rules of that thing, right? Do the rules of that thing. Because you're going to find that once you restrict yourself long enough, you'll become better at finding the correct stuff. But I'm telling you beforehand, it's going to be difficult because it's going to feel like I'm robbing you from trades, right? It's going to feel like the market went up and the market went down. But here's what I want you to hear in my voice in your head, right? In the Futures on Futures live session, Chadwin said, not everything that goes down is a trade. Not everything that goes up is a trade. But everything that fits your rules is. That's all that matters, right? That's all that matters. Yes, you have to take the training wheels off and ride that bike, right? It's either burning you or you're cooking dinner, one or the other. But I know that's going to be the frustration. I also know that once I show anyone that your curves must be close, everybody says there's no more trades, all the curves are close, right? But then I'm on the stream with them catching the same trade. It's going to feel like that because it's going to feel restrictive, right? But to use, again, a biblical reference, right? Train up a child in the way you should go. That's what's happening here. We are children in the area of trading. So we need to be trained so that when you're older, in other words, you come into the grace area of a thing, then you understand and you won't forsake it. You won't move away from those rules that you got. But it's not about, oh, let me not preach it. My mind is going 7 directions at once. But it's not about what you don't do. It's very much about what you do. So many people say this. They say, I never raised my kid like this. I never raised my kid to do that. I never raised my kid to do that. But what did you raise your kid to do? Because the Bible says you have to have active participation in that life. So train up a child. It's not what you didn't do. It's not what you never shown. It's what you did do. What did they see in you? Right? Train. Active participation. So even when we bring that to trading here, I don't know why I said that. It might be for someone to share to someone. I don't know. But even when it comes to trading here, we need to understand it's about all the rules we do put in place. That's what matters. It's about the restrictions we do put in place. Right? Yes, idle hands of the devil's workshop, or like the Bible says, a little sleep, a little slumber, a little folding of the hands, so shall poverty overtake thee. Right? That's the word of God. Ladies and gentlemen, it's been a blessing to be on with you here today. I pray that you have a blessed day further. Normally we'd stay a little longer on, but I kept it for you guys. We had a longer Q&A session here today. I'm thankful and blessed and highly favored to be on with you all. As always, if you have a moment, you haven't left a review on Google yet, please go and drop a review. And if you have left a review on Google, let's put some engagement in the actual Facebook group. If you're on Facebook, and just go and post one thing you learned from this class today, someone else will come back and they'll come watch the class and they'll learn something as well. And you'll be helping my marketplace ministry by making sure that someone else finds this little gem. And thank you all for always remembering which class and which day I spoke about something. As I speak such a lot, it does slip by with me. But when you guys remember it and you're able to, like Jack posted early on and Dan spoke about, those are beneficial to everybody. So thank you all for making those notes as well. It helps everyone grow. Right? I shall see you all in the interactive session tomorrow, and we will have a good time there as well. We're going to talk about some advanced trend. So it is good that we kind of ended on trend here today again, right? Because we're going to talk about that again. Still confused, so I was on the 5-minute, but you were saying it was going to blow through, so I didn't understand why. Linda, at that time, I didn't check the other assets, nor did I check the other trend in that. I was talking, and it did blow through on the other assets, right? So this wasn't a full analysis, and we shouldn't treat the session like that. But we saw then afterwards that was the only one with a trend based on, I'm not sure who asked the question, might have been Brandy, or maybe it was you about the 30-minute, right? But thank you, everybody. You guys are best. I'm going to see you guys on tomorrow. Mandy, thank you very much as always. You'll be blessed. Thank you, always supporting me here and making me look good in front of all these people. Thank you for all that answers as well. Thank you, everyone. Bye-bye. Bye-bye.